Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Jonathan Twomley. How you doing, sir?
I'm doing great this morning. How are you?
I'm doing very well. So we had Fed Day yesterday. It's always a fun and exciting day. As expected, we got our 75 basis points, which was a big nothing burger. I think everybody expected it. The real fun started with first the Fed statement, which was a little more dovish than or at least people appeared to think it was dovish. And then came the Q&A, where we had the big old Jerome Powell hawk. He was very much in Jackson Hole mode. What did you think about it? What do you think they're trying to do? We're this is very interesting. We're going up 75, and we're going to go up some more.
I mean, listen, I think that the Fed is trying to sort of do two things at once, right? I mean, they're trying to scare everybody into kind of tamping down on their expectations and maybe even have a little recession, kind of have a reset, but they also don't want to raise rates so much that they kill the economy. And they're trying to send like two messages at the same time, which is, we're going to raise rates as much as it takes to kill inflation, but we're not going to raise rates enough to kill the economy. And those are two things that are, a little at odds with each other.
Yeah.
So I think that's why you're kind of getting the little bit of the mixed message. You've got the almost like the good cop, bad cop thing going on with, the statement seeming a little dovish, and then Powell coming and squelching that. I do want to say too, though, that one of the things that I have been seeing in the multifamily business is a lot of hopium around a Fed pivot, right? Like people have become very, very addicted to low interest rates. Many deals were structured around the idea that interest rates would stay permanently low, and a lot of deals are being held off the market because there's a certain segment of the seller population which is convinced. And when I say convinced, like convinced because they've got to be convinced, because their whole, it's like their whole business plan, hinges on this, convinced that after the new year, the Fed is going to start cutting rates again. And then the good times will be back, and they'll just blow the bubble back up again. I don't buy that. I don't ascribe to that point of view at all. I think high interest rates are here to stay. I think the Fed always wanted to get interest rates back to a higher level. They just never had the opportunity before because they were scared of Wall Street. Inflation has given them more political cover. Basically, inflation has given them the ability to tell Wall Street to take to go pound sand, and they're finally getting back to where they think rates should be for the health of the economy. So I don't see, absent a really major crash, I don't really see them, frankly, even if we do have a recession. Maybe they like just for lip service, they cut like a quarter point or a half point or something, just to kind of say they did it. But I don't think that they have any desire to go back to the days of, you know, zero interest rates and all the malinvestment that comes with that. So
Yeah, I think there's a couple of things going on behind the scenes. Something I said months ago, and I feel more and more confident about it today after watching the press conference yesterday. I believe one of the things, if you gave Jerome Powell truth serum, he would admit is he's trying to kill what's called the Fed put. I don't think he likes the fact that Wall Street has learned or been conditioned, probably is a better way to say it, to cry like a baby, and they get what they want, right? They don't like temper tantrums. I think the Fed is trying to distance itself from being the caring parent who comes in to try to soothe the child. Um, they're just going to let them whine, and that just means paying ahead. So I think Powell is definitely trying to kill the Fed put. What do you think?
yeah, I mean, and listen, uh, keeping asset prices high is not part of the Fed's mandate,
No,
right?
it's nowhere there. It's not on the list.
The Fed has a dual mandate legally, right? One is to maintain price stability, and the other is to maintain employment, right? And they are not, their business is not keeping Wall Street happy. I mean, they
Yeah.
do because everybody who's on the Fed came from Wall Street, right? So there's a bit of conflict of interest there, but you do wind up with people, I think, who kind of have the country's best interest in mind, and they're they're doing what they, or the, let's say not the country, the economy's best interest. I mean, I don't think these people are idiots, right? I don't think that they're also evil. I think that they're doing what they think is right. In this case, I happen to agree with them. I disagreed with them for a long time about leaving interest rates so low for such a long time. But I think in this case, maybe they just felt they couldn't do it. But I agree with you. I think that Powell wants to break that link between the Fed and Wall Street being happy about
Yeah.
free money pumping up stock prices, right? So
Yeah. The other thing that I think is going on right now, and clearly based on some of Powell's answers, he wanted to remove any hope of a pause, a pivot, whatever, right? He's like, no, folks, we might slow down, which is just logical, but we are going to go higher. He actually said if they had to do their SEP, which is basically their prediction model today, the 4.6 would be higher. And, the Fed rate very easily could go to the fives sometime next year. I think we get there in a slower manner, but we still get there is what I'm thinking.
yeah, I mean, they know where they want. Listen, I mean, just look at this, like where interest rates have been historically, right? They they've been up. It's kind of where we're getting to now, right? So that's where they want to go. I mean, they were in that range for many years until really like the monetarists got in charge, and then they got addicted to their own medicine, right? So it worked for a while, but now it stopped working, as inevitably all these things do. So I think
Yeah.
they realize that kind of sounder money, higher interest rates, reward savers, you know, it's just a better, it's
Yeah.
better
It's a
for the
better.
economy. Not having everybody's home be a casino, right? Not having people chasing assets and engaging in malinvestment, not having the way that you boost your stock price be buying back stock rather than improving the operations of your company, right? All that stuff. There's just been a massive so much dislocation in the economy that has benefited a certain number of people, and of course those people are disproportionately powerful and have had the ear of policymakers, right? But I think they're trying to push back, and we'll see how successful they are. But
Yeah.
yeah.
The other thing that's going on is, you have a friend, and I've actually heard this a bunch in the media, is and I get a lot of comments on this. The Fed can't go as high as they want because they won't be able to service the debt. I know you have somebody in your
Yeah,
network that you're
so
close
I
to.
have a good friend named Bruce Frazier, who's a great real estate investor, and he also runs a hedge fund. He's originally from the hedge fund business, and then he got into real estate business. And so Bruce is a guy, much like yourself, who does a lot of really deep dives into the economy and interest rates and stuff, because he's got to be thinking about this stuff all the time. And so, recent conversation with Bruce, and I just saw that he had posted something similar on LinkedIn the other day. But Bruce has been saying for some time that his view is that the Fed can only go so high because of the federal government's inability to service the debt, and what they're doing is trying to do shock and awe so that they don't have to go, that hoping to like do it so fast, and so kind of disrupt things so much by moving so quickly and speaking so aggressively that they can talk the economy down, and therefore they don't actually have to go that high on the interest rates, right? So because again, his view is that the federal government will just collapse under the weight of debt service if interest rates go up. And I think there's definitely some validity to this, right? On the other hand, I think that the Fed may well take the view that, like, look, interest rates are our problem, right? Inflation is our problem. The federal budget deficit, that's Congress's problem. And if if they
Yeah.
can act together, it's not there's nothing we can do about it. If they can't figure out how to get, spending in check, get more revenue into the government, do what they need to do to reduce the deficit, right, and get the debt under control, then that's not our problem, right? So um, that could well be what's going on. Like I said, I'm seeing what's going on in, say, England, right, where the Bank of England just raised rates 75 basis points to follow the Fed, and they are talking about even more aggressive interest rate hikes. Their inflation rate they're projecting to get up to like 11% in
Yeah,
England.
last read was 10.2, highest on record. Yeah. Crazy.
So I don't think the Bank of England is stopping anytime soon, and they're certainly not, uh, concerned about the budget deficit in the UK, right? Now the markets are. I mean, you saw what happened when Liz Truss, you know, came out and said they were going to cut taxes and raise spending, and the markets went nuts, and they
Yeah.
they punished her badly, and now she's gone, right?
Mm-hmm.
That can happen in England, but you know, I think that central banks around the world, like pretty much with the exception of Japan at this point, are all aggressively raising, and
Yep.
and I don't really see it stopping until they feel like they've whipped inflation. I mean, I do
Yeah, I
know
think
too. Sorry, go ahead.
I was just going to say, I think there's, a couple things you can count on. And Jerome Powell told us at Jackson Hole, pain's coming.
Yeah,
And there's a lot of people that have been hoping he was not speaking about them, right? Pain's coming, but not to me. And I think that was hopium. And there's a lot of companies that won't exist in 9 months because they were zombies. There's a lot of people that borrowed on short-term debt with unrealistic assumptions that will lose assets or go bankrupt or whatever. We're going to clean the system. The system got addicted to cheap rates, and I think Jerome Powell wants to, clean it out and save his reputation. I really do think for him it's reputation at this point. He doesn't want to go down as Arthur Burns. He doesn't want to go down as the transitory guy. He would much rather go down as the guy that beat this, a la Paul Volcker. I really do think he's thinking legacy, and he doesn't want to look at the history books or his, future generations to look at the history book and be known as Arthur Burns. I don't think he wants that.
listen, but he's not doing it alone, right? He has to get the rest of the Fed governors behind him, right?
Sure.
Because they vote on these things, so he can't. So clearly the rest of the Fed is with him on this. I mean, the
Oh, you know
distinction.
what? I don't know about that. So this is why I think the announcement or the statement and the Q&A was so different. I think the statement was the Doves and Hawks getting together and meeting in the middle. And then
Interesting.
Powell is like, nope, I'm the only guy standing in front of the podium. I'm going to yank this chain. Um, I think Powell's the hawk. And he put out a statement that appeased others. And he's
Yeah.
like, nope, I'm the only one in front of this microphone. Here's what I think. That's what I think happened.
Well, but I guess what I mean is, he a majority of the board still went along with this, right? So because otherwise couldn't raise rates. He can't unilaterally
Oh
raise.
no, yeah, certainly, yeah. As far as getting this, but I don't think 75 was the point. I think the statement was, "Hey, this is the last time. We're going to slow down a little bit. We know there's a lag effect." I mean, if you read the statement, it's all dovish. I mean, it was when I read it, I'm like, "Oh, this is not what I wanted." And then Powell steps up to the microphone and just yanks the chain. I'm like, "Oh, there we go. That's what I wanted."
Yeah. Well, listen, I mean, I know that there's another strain of thought which I've also come across, which is, hey, look, the stuff that's driving inflation right now has nothing to do with what the Fed is doing, right?
I hear
They
that.
can't. So why are they tanking the economy? Because over a fool's errand, because they can't get inflation under control, because inflation is right now because of other factors, supply bottlenecks, and people not wanting to, people switching jobs and stuff like that, right? I still think though that even if that's the case, the Fed still wants to get interest rates normalized, right? And they're still using this cover of inflation. Either it's true, they will rein it in, or it's false, that, people are right that this doesn't really, that interest rates are not going to affect the stuff that's causing inflation. It doesn't really matter, I think, actually, because I think that they're seizing the moment to raise
Agreed.
interest rates,
Agreed.
with Wall Street kind of neutered by inflation, so Wall Street can't say anything about it, right? And they're just taking this opportunity, right, to kind of right size interest rates, because they've been talking about this for years, right? I mean, it's not like the Fed has ever come out and said, we think interest rates should be close to zero forever. They've never said that. They have been saying ever since the Great Recession, this is temporary. Interest is going to go back up, right? But they were overly cautious about it. And then, again, in 2018, 2019, Wall Street lost its mind when the Fed raised interest rates a little bit, because they were like, hey, the economy's strong, we can do it. And, Wall Street went bananas. So they lost their nerve, right? But I think now they're using this moment. And look, so far, they've been right? I mean, some people may say, oh, well, the lag, there's a lag, we haven't seen the effect yet. That well may be true. But I mean, you see like the jobs reports that have come out, right? I mean, the job market's still on fire. And
Yeah.
like it doesn't seem to be the case that jobs are suffering. You may see, you're definitely seeing certain sectors like the real estate industry is taking a beating, right? I mean, Open Door just laid off 500 people. Like certain segments are having a tough time, but if those people are getting sucked up into other jobs because the job market's on fire, right? It doesn't really matter, right?
Yeah.
So we'll see.
Yep, we'll see. This is, if watching the Fed's in charge. You and I are in an industry that is very levered, very debt sensitive. So we watch the Fed, we watch rates.
I would add one thing, which is that I think that there are certain areas of the country which will get hit harder than others. And for instance, places like Phoenix, Arizona, where the entire economy seems to be based on building houses for people moving to the area, right? Like that's they got whacked like crazy in the downturn, the Great Recession, because that business dried up, and that was essentially like their main business. I keep on hearing they've diversified their economy since then, but I don't know.
We'll see.
But they're definitely, Las Vegas, again, if people are cutting back because of, they're going to cut back on discretionary stuff like gambling, right? And also the same thing, that economy is also really heavily kind of building focused. So I think there's going to be some pain there, especially amongst like real estate folks for sure, who are now looking at not being able to complete their flips or what have you, right? So.
Yeah, I think there's a lot of I think there's pain coming. It's not going to be short. This is not going to be a quick pivot or turnaround. As one of my experts on Monday, Greg Dickerson, says, the good times never last, the bad times never last. We're just in a bad cycle, and the only way to get through it is to get through it. So, Jonathan, thank you for all you do. How can people follow you?
Yeah, so there's a number of ways. I do want to like sort of tease something for folks, which is we're in the process. I've talked about this a little bit. I'm in the process of going through a big rebrand of all my stuff, and you've probably noticed that I started directing you guys to go to Apartment Investors Club, right? We're going to shift gears a lot with the Facebook group. And one of the things that we're going to do there is actually kind of direct people over to a new Facebook group for Apartment Investors Club. It is not open yet, so please don't go over there. However, this is what I want to tell you. When this new Facebook group opens up, the first thing that you're going to get when you go there is a 4-part free video series on basically how to do syndications, right? So it's going to be how you raise money, how you find deals, what a syndication is all about, and some important mindset set stuff. So that's going to be like your free gift for going there. This is it's probably like 3-4 hours of content. that you'll get for free. All good stuff. And so just keep your eye out for that. If you don't want to miss that, right, then you could do one of two things or both. Go sign up in my current group, Multifamily Investor Community, where you will be invited to the new group once it's open, and get on my email list. And you can do that by going to apartmentinvestorsclub.com.
Awesome. Thank you so much.